Welcome back to the channel. In today's video, I'm going to share with you how I figured out what's the best risk to reward ratio when scalping based on actual trades. Tons of value in this one. If you want to support the channel, you know what to do. Let's get busy. So what I'm going to do is go step by step, show you exactly what I did from the charts to recording the data and my conclusion at the end. So this is a process that you can follow yourselves and it will help you regardless how you trade, whether you're scalping, you're swing trading. It's just a formula or something you should consider when you're looking at risk to reward ratios. So what we're going to do now is look at 3 different risk to reward ratios. We're going to look at a negative risk to reward ratio of 2 to 1, we're going to look at a 1 to 1, and we're going to look at a positive risk reward ratio of 1 to 2. And we're going to use it, backtest it, using the setup I normally trade on a daily basis. We're going to see how it works, right?
Okay.
So this is what we're doing. We're collecting data because it's going to help us in the long run, build our confidence. We know our formula, whether it works or not. And then when we are in a trade and we get a bit nervous, just remember that we've backtested everything. This works, I just need to follow the plan. So we're gonna start here. I'm gonna show you quickly. So as you can see, this is Euro USD. Yes, I focus on one pair. It makes life so much easier. And I tend to take one trade a day. So I try to keep things very simple. That's gonna help you. So if you haven't been following the channel, if you don't know, I've addressed this in a couple of videos. One pair, focus on the pair, take one trade a day, you're good, especially when scalping. That's all you really need to do. Have realistic expectations. Do not get misled by a lot of what you're seeing on YouTube. There are a lot of people who are scamming, who are on demo accounts, talking about them making $10,000 a month. And then nothing but demo accounts. So let's not go into that. So do not have unrealistic expectations. Just focus on you. Focus on what you need to do, okay? So this is what I'm doing. So one trade a day. So I marked it up already. These little blue squares represents a scalping opportunity based on price action that I like to see when I take a trade. Most of them here is using, well, all of these blue squares here so far is based on a negative risk to reward ratio, 2 to 1, okay? So actually, no, we're gonna look at 2 to 1 first. So this is basically the price action I wanna see on a daily basis. So I marked them all up. And I've got about a small sample of 20 trades here. So that's what we're going to base the numbers on. It's not enough to do 20 trades. I've done over 6 months of collection of this kind of data, done this over 6 months, and it's given me a realistic picture or projection on what I could potentially do. So this is what I recommend. Definitely do more than 5 months. Collect as much data as you can and then base it on that. So we're going to jump into the first trade. Actually, we don't even need to jump into M5, we can see it from here. So if we're using a negative risk to reward ratio, you can see clearly, starting with a negative risk to reward ratio, we win most trades, okay? So we've got 20 trades here. So here from that high to this low, this is 9 pips. So negative risk to reward ratio, I'm risking 2 to get 1. So I need 4.5 pips to have this as a winning trade. I get 20 pips from that move before it stops us out. So it's a win. This is a win, this is a win. Even this small one here, if we just zoom in a little bit more. So this one, it looks very tight. At first glimpse, it doesn't look like it's a win, but let's have a look. We have 15 pips. This drive up, how much is that? That is 10 pips. So again, another win. So this is why I tend to use a negative risk to reward ratio. You win more trades. This was a very choppy day, as you can see, but you can still get this trading opportunity and a win using a negative risk to reward ratio. So I've got about 20 trades here. Let's get through quickly. And you can see all of these are really wins using a negative risk to reward ratio. Even this, very tight, but it's a win. And there's only one loss, which is here, marked that in red. So the red will represent a loss, blue represents wins. So we've got one loss, and that was at the beginning of the year, okay? So slow and choppy price action, regardless of whether you're using a positive, negative risk reward ratio, you're probably going to lose in a slow market like this. So what I did then, once I gathered all this information based off the chart, I switched over to another document, or to be honest, I use my phone. I just recorded this information on my phone, but what we're going to do now is switch over to another document, and I'm going to record that information, and we're going to go step by step, showing you exactly what you could do yourselves. Okay, so we're here on a Word document. We're looking at the risk to reward ratio and we're basing it on 20 trades in January. Using a negative risk to reward ratio of 2 to 1, so essentially risking 20 pips to make 10 or 10 to make 5, regardless of the ratio, 15 pips to make, where's my maths gone? 7.5. So regardless of the risk reward ratio, 2 to 1, yeah? 19 wins, 1 loss, the win rate would be 95%. So yes, typically my win rate using a negative risk reward ratio is above 80%. So it's very powerful if you're new to trading and you lack confidence and you want to build confidence from winning trades. Negative risk reward ratio is a very high probability way of scalping. All right, so we're going to move on to a one-to-one now. Okay, so back on the charts again, and what we're doing now is going to look at a one-to-one. When we're doing one-to-one, clearly we're going to lose more trades, okay? But let's have a look quickly. This one, I believe this is a win still. That's 9 pips. We get 20 pips. That's a win, that's a win, that's a win. This is probably a loss, so let's just check this out. Let's have a look for losses and speed up this video a bit. So that's about 15 pips. Do we get 15 pips back? One-to-one? No, we don't. So this is a loss. So we could change this from blue to red, okay? To represent the loss. Okay, so this is step by step exactly what I did. I did it all on my phone. So in my downtime, I just quickly jumped on my phone and did all of this. So you could definitely do this at home yourselves. This is all wins, one-to-ones. This is all wins. I think this is a bit tight. Let's have a look. So here we are risking 40 pips. I doubt that's a win. Yeah, that's a loss. So anytime you're risking a lot of pips, like 40 pips or so, it's going to be harder to win the trade, you know, because we don't know if it's just going to be a pullback. We don't know if it's going to be a full reversal, but it's going to be harder to win the trade. So smaller ranges, more likely. 20 pips, likely to get 10 pips easily. One-to-one, okay, maybe it's pushing it. But anything under, if you're risking 15 to go for 15, more likely to get that win. That's a win. Yeah, that's a win, that's a win. That's a win. This is very tight. Let's have a look at that one. So that's about 21 pips and we get 14. So that's a loss. And we continue the process.
A few moments later.
So in total, I think we've got 4 losses. Let's have a look quickly. So we've got 1 loss there, 2, 3, 4. Okay, so we're going to record this as well. Okay, so one-to-one, 20 trades again, 16 wins, 4 losses, win rate 80%. Yes, that's correct. One-to-one will give you a high win rate as well. It is usually less than a 2-to-1, which makes sense because you're asking for less. Yes, so again, this is based on only 20 trades. The more trades you take, if you take about a sample of 100 trades, you may find these numbers change dramatically. So this may push down into the ranges of 80 or 70 to 80 using a 2-to-1. A 1-to-1 maybe 60 to 70, and it varies depending on the risk to reward ratio. So as you can see, the more we ask from the market, the less opportunity or the less probability that you're going to win the trade, okay? So it's something to consider. Okay, so we're going to follow the process again and we're going to do a 2-to-1. So we're going to, a 1-to-2. We're going to risk 1, trying to make 2. So that stays a loss. This, I believe, becomes a loss as well. Risking 20, yeah, that's easily a loss. So we needed, risking 20 pips, we need about 40 pips, so that's a loss. That's a loss, that's a win, and this looks like a loss. Let's have a look. We are risking here 14 and we get 22, so that's a loss as well. Okay, so and I continue that process so you can see the gist of it, so you know more or less what you're trying to do. I'm going to switch over. I've already done this, guys, for you, so I'm going to switch over, speed up this video a bit and show you the results of this. So back over here, using a positive risk reward ratio, we've taken 19 trades because there was a day that there was no trades available using this. So we got 19 trades, and out of the 19 trades, 10 of them were wins and 9 of them were losses. So you can see the dramatic change here, 52% win rate. So if anyone ever tells you to take a 1 to 2 or a 1 to 3, understand this, you are going to have a lower win rate. But still, a lot of people promote this and there is a reason for that. And I'm going to switch over to another document and put all the numbers together, and we're going to crunch and analyze the numbers, and we're going to figure out what's the best approach depending on how you trade. Okay, so what I've done here, risk to reward, we've got the ratios here. So 2 to 1, negative 2 to 1, 1 to 1, and a 1 to 2. Now, if we were to risk, say, 1% per trade, we're going to look at how it would reflect in our P&L. Okay, so let's start with a negative risk reward ratio. So 19 wins, 1 loss, 95% win rate. At the end of the month, we'll get a 8.5% return. Okay, so this is a percentage return. So if you add it all up, taking into account your losses and everything, 8.5. Hopefully my maths is right. Need to double check this. Actually, you could check it if you want, but you get the idea. We have 19 trades. If it was 1%, we have 19% up on account, but because it's half of that, it should be 8.5 if my maths is right. Okay, cool. So we then take into account, let's have a look at the 1 to 1. So 1 to 1 now, risking 1%, 16 wins, 4 losses. That's a lower win rate of 80%, but at the end of the month, we are getting a higher return in terms of percentage. Why? Because we're not halving our profits, because we're not using a negative risk reward ratio, we're using a 1 to 1. So 16 trades, 4 losses, what's left is 12 winning trades, representing 1% per trade. We've got 12% at the end of the month. Makes a lot of sense. Then we have a 1 to 2. So with the 1 to 2, again, same process, 10 wins, 9 losses, 52% win rate, and then this number changes. Now, this is based on 20 trades. I've done this and had different results based on more than 6 months of data, right? You may find that you still have a higher return. So you may end up with, say, 14% monthly, even though you have a lower win rate. And that makes sense because every single trade you lost, you make it back when you win a trade. As long as it's a positive win rate, if it's above 52%, I think you could even get away with something as low as 40%. You still can be profitable using that risk to reward ratio. So that's why a lot of people promote it. Okay, so now I gathered all this information and needed to figure out what's best for me. Now, actually trading is different from talking about trading. Okay, so there's so much people talking about trading. I actually trade. I know when I try to take a 1, risking 1 to make 2, I'm going to sit in the trade a lot longer. At the end of the month or end of the year, I may make more money, but I'm going to sit in the trade a lot longer. And I know the emotions that creep in when I'm waiting for that 1 additional pip to make it a 1 to 2. The longer you are in a trade, the more likely your emotions are going to take over. It's very hard to be up 1% and you wait for that additional percent, and you're 1 pip to get in that 2% and seeing price reverse against you and take you out. Yes, it doesn't matter. It just counts as 1 loss, and you need to be disciplined and stay focused until that next setup arrives, and you should be able to get back on track. But it's very hard to take that kind of loss. It's very demanding on your emotions. So a 1 to 1 is less of a demand. So a 1 to 1 will give you a 12% return. In this, based on these 20 trades, this is the best scenario. Good win rate, 80%. We are going to take losses. So again, you have to understand, no matter what you do, you're going to take losses. So like I said, this is only based on 20 trades. The more trades you take, you're going to find more losses. So you need to understand losses are part of the game. It's just a case of how you manage your losses. If you could overcome them, if you could stay focused and not take that small L and make it a massive L. Okay, so that's very important. So a 1 to 1, still a high win rate. I mean, 12% a month, 11% a month, 8.5% a month. all of this is great, but this is all based on the same amount of work. So maybe you want to get the most amount of money for your efforts. So this would make a lot of sense. 8% win rate, that's decent. 4 losses out of 16, I can live with that. 12% return on a month, that's great. So in this, I'm going to be in less of a holding position. It's very easy to get 10 pips if I'm risking 10 pips. 20 pips takes a lot more time. It could take an hour or two to get that 20 pips, but that's okay. That's within a day. A 1 to 2 could be easily 2 days or even more, right? So we then look at a negative risk reward ratio. This is going to give you the shortest amount of duration in a trade. You're going to be in and out as quick as possible. You're going to have a high win rate, and at the end of the day, you make some money. So this is the easiest in terms of demand on your psychological aspects or your emotions when it comes to trading. This is going to be the easiest to manage. You place a trade and you can walk away. If you lose it, okay, it's a setback. And that's the problem with this, okay? So instead of being able to make, say, the higher number of returns, so for instance, if you were to make, say, 20 wins, which should represent 20% if you're using a 1-to-1, using a negative risk reward ratio, that could be 10%. But remember, you're going to take losses, so that could push you down to like 7%. So it's going to be difficult for you to set, oh, I only made 7% when I could have potentially made 16%, as an example. So this is something, that's a drawback in this. This is something you need to consider. What works best for you? So for me, I looked at all these numbers, I crunched all these numbers, and what I'm trying to work with is actually the combination of the two. So I base it on the actual trade. When I'm in the trade, I look at the range. If it's a massive range, I want to get in and out as quick as possible. So I may use a negative risk reward ratio of 2-to-1. Just winning that trade, banking that money, and I'm good. If it's a small, tight range where I'm risking something less than 15 pips, I'm going for a 1-to-1, because it's very likely for me to get a 15 pip win if I win the trade, and it's not going to take that long to get 15 pips. So I mix it between the two here. Personally, I can't hold trades that long without having my emotions second guessing the position, and sitting in front of the computer for long periods of time or in a trade long periods of time just doesn't suit me as a trader. So this is my conclusion. You do need to consider who you are as a person, how you trade, what setup you use, and what works best for you. So forget all of the normal jargon of yes, you must use a 1-to-2 or yes, you must use a 1-to-1. What you really need to do is discover through backtesting what's best for you. Using your setup that you trade with, get some data, collect the data, and figure out what's the best risk to reward ratio based on your trading style. And once you have that, you'll be able to make a decision that best suits you, and that should make you more relaxed when you're taking a trade. And then you can focus slowly on just the entries and risk management, and the rest of it is based on statistics. So if it's a winning setup, if it's a winning strategy, you just need to be patient. You do need to focus on your discipline. You do need to focus on your patience. All of these things are part of trading, so it's something you need to focus on to become a profitable trader. But this will help you because it will give you confidence to support what you are doing when you're in the trades. Hopefully this has been very useful for you guys. If it has, you know what to do. Support the channel. Hit the like button, hit the subscribe button. I keep on getting examples of what I'm doing and examples of trades and my progress as I progress as a trader. So this is Patrick signing out. Until next time, peace.